Good afternoon, good morning if you're on the West Coast. Happy Thursday. Today is February 8th, 2024. I'm Sean McLaughlin, Options Sean on Twitter. This is the All Star Options Jam session where we review trades that we are in that need some attention. We review trades that we've exited over the past week. We update some stops on positions that we are currently riding, and we touch on new trades that we've put on since we last spoke. This is a great resource, a great weekly review for our All-Star Options subscribers, but it's also great for you as well if you are just curious and checking in for the first time. You get a little bit of a flavor of our thought process here. But before we get into the nuts and bolts of this, we got to drop the old disclaimer here that everything we're discussing is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn from seeing how I think. All right, so I'm going to try to go through this a little slower. I feel like last week we had a lot of charts to cover last week, and I feel like I was rushing through it if any of you tuned in last week. So I'm going to make a conscious effort to go a little slower today. I hope that's okay. Gene, I hope that's okay. We're going to do this. This is going to be like an hour-long episode. No, just kidding. Just kidding. All right, so let's start at the top. The S&P 500. We talked about this last week, but we are breaking out. We finally broke through that resistance level that corresponded with the basically January 1st of 2022 highs. We have decisively broken through. And we are seeing it not just on the index level, but we're seeing it in many of our long positions that we are in currently. Now, we'll talk about how we're going to hedge some of that in a little bit. But for now, the S&P is pointing higher, and the volatility index is pretty much confirming that. The VIX is, chopped around a little bit over the past few weeks, but it is moving back again lower or remaining low, depending on your point of view there. So all signs currently, at least according to what we watch or what I watch, currently says the bull market is not due for rest. Now, I know many of you are paying attention to the rest of the analysts on the team, and I know that JC is making a lot of noise out there about getting bearish, and I don't disagree with a lot of his takes. But I'm more of a prove it to me kind of guy. I want to get short after we see some proof that it's time to get short. I don't like fading things from the highs. But anyway, that's neither here nor there. Let's talk about Snap. All right, Snap, an earnings debacle, a disaster. Stock got destroyed following earnings on Tuesday night. I don't know what it is that spooked investors. I don't care. I didn't listen to the conference call. I don't use the product. All I am is a trader who follows price. And before the earnings event, Price was telling us that things were looking pretty good at Snap. In fact, the day before earnings, or the closing price on Tuesday, and the earnings were after the market closed on Tuesday, the closing price for Snap was right at the top of this range, basically at the highs for 18 months, 18-month highs. So things were looking real good. Unfortunately, the rug got pulled on Snap investors. Whatever was said during the conference call or whatever numbers were revealed, investors did not like, and the stock gapped down 30% at the open the following trading day. Now, I've got a piece that'll be coming out later this afternoon talking about this, but I'll touch upon it here. If you're a stock trader and you were in Snap and you had a stop loss, I mean, the stock closed the day on Tuesday somewhere like $18 a share, somewhere in that neighborhood. If you had a stop in that stock at, say, I don't know, 15, which would have been a reasonable stop price, right? Your stop got filled at the opening price on Wednesday morning, far lower, somewhere in the $11 range, far lower than where your stop was if you are a stock/equities trader, right? That's one of the big risks that stock traders have. You know, we can place our stop losses wherever we want, either leave them with our broker or have a mental stop knowing that we'll exit if it gets to a certain price. That's great, but if you get a gap down like we had here in Snap, there's nothing you can do. Your stop loss is not going to protect you. You are going to suffer perhaps the mother of all losses. And there are certainly players, I am sure, especially stock traders, who were into Snap and perhaps positioned a little too large, perhaps over leveraged, and they got destroyed yesterday, and it continues today. Snap's even lower again today. Now, that being said, us as options traders who put on a defined risk spread, we knew what our maximum loss was no matter what going into that earnings. We put a call calendar spread on. We shorted a March 20 calls and purchased the June 20 calls. We paid 85 cents for that spread. That 85 cents was the absolute most we could lose, whether Snap went to zero or if Snap went to $1,000 a share, right? If it went up too far, too fast, we would have lost also. That's the nature of a calendar spread. But no matter what, the most we could lose is 85 cents. And you know what? Given what happened in Snap, I am very happy of how that we were in a trade like that, right? Very happy. I ended up exiting the long calls this morning, the June 20 calls. I got 14 cents for them. I covered the short call yesterday for a penny just because, right? So I ended up getting out at 13 cents, which is better than zero. So as a trade, I originally paid 85 cents for. I collected 13 on the way out, so I lost 72 cents, okay? I sized my position in such a way that if I lost all of it, it would just be a 1 to 2% loss in my portfolio, which is what it was. And that's fine. I can come back from that. That's a regular loss for me. And it should be a regular loss for you. We don't want to be risking more than, I generally don't risk more than 1% of my equity on any one trade. I sometimes will risk as much as 2% if, if I got a special feeling about it, right? Or maybe if it's just a higher priced position. But having that mentality, having that mindset, having the defined risk and positioning my size properly made all the difference. So for me, Snap was just like any other loss. For many others, especially options or for stock traders, they are licking their wounds, and they're still licking their wounds today. Sorry if that was you, not to rub any salt in your wounds. All right, so that's enough on Snap. That's the lesson for today. The next two trades here, we are still currently in, but these two trades bear some watching because they are flirting with our stop loss level. Rocket Companies, ticker RKT. We got into some long June 13 strike calls for $1 just a couple weeks ago on January 19th. 1150 is our stop loss. Rocket closed right at 1150 yesterday. Now, I want to see it close below 1150 right now. I know we're splitting hairs here. We're talking about a penny. But hey, I've got defined risk on. There's never a reason to panic on a trade like this, right? It closed at 1150. Well, it's back above 1150 today. Last I looked, it's not. It's actually, I take that back. It's now below 1150. So if we close below 1150 today, then I'll be looking to exit this trade tomorrow. But just keep that on your radar if you're in that trade or if you're following the plan that we're on. 1150 is our level. If we close below it, we will exit this trade tomorrow. Similarly, Wells Fargo, our stop loss level is 48. We've flirted with it a couple times. We've touched it. We've traded below it intraday a couple times over the last over this week. But we keep closing back above 48. As long as we can hang on to that 48, we're going to hang in with this trade. We're long January 2025 calls at the 60 strike. So we got plenty of time for this to work out, but we want 48 to hold. If it can't hold 48, then it looks like a failed breakout to me, and I'm going to want out of that trade. So Wells Fargo and Rocket, those two trades that we're on are on high alert. So keep that up top of mind. All right. We've got a bunch of updated stops. I talked about this last week. With the market doing what it's doing, stocks are ripping. That's great. No reason to be unhappy if you're a bull and you got bullish positions on like we do. But I'm listening to what JC is saying, and he's talking about the divergences that he's seeing, and we're starting to see some signs under the hood that could indicate that at least a pause or perhaps even a more significant pullback is possibly in hand or coming soon in the stock market. And with a lot of long positions that we currently have on that are sitting in some nice, really large open profits, I'm starting to get more aggressive with my stops. I'm still letting these positions ride. I'm not getting out of them, but I'm being a little bit more aggressive in raising my stop loss levels just in case the rug pull that JC is warning about does happen. So with that in mind, let's rip through some of these positions we currently have on that we are going to update our stops. In no particular order, all right? But we'll just go down the list. So starting with Uber, This is a trade we got into on November 8th, and I made a big deal about how this was a hard trade. It felt like a hard trade at that time, but you know what? Hard trades, they don't always work, but when they do, they work really well. And this Uber is a perfect example of that. We are crushing it in this Uber trade right now. But that said, I'm raising my stop to 60. You can see right here. One thing that does not show up on these charts, my team, my analysts don't like to throw up moving averages very often, but I'm a big moving average guy, at least for, not necessarily for signals to get into positions, but certainly for signals to get out. And one of the moving averages that I follow for exits is the 50-day moving average. So a lot of these stops, if you're looking at the chart that we have here, if they don't look sense, like this 60 just looks like it's floating in the middle of nowhere. In this, it does, yes, but that actually corresponds really nicely with the 50-day moving average. And so that's the level that I'm using for Uber. So right now, 60 is the level. As long as we hold 60, I'm going to stay with this position in Uber. Republic Services, ticker RSG. We're along April 165 calls. We got into this back in November 13th. We're having a great ride. We're moving our stop up to 167. That corresponds with the previous resistance level from a couple months back. We think that level holds. We want it to hold. If it doesn't hold, that's our signal that it's time to get out. So RSG, our new stop is at 167. Amazon's playing well for us. We're in a bull call spread. We're along July 150 calls, and we're short the July 180 calls that we paid $10.80 for that spread back on November 22nd. As you can see, it's moving our way. We had a nice gap. Was it this week or last week? Last week, I think. Nice gap going in our favor. Our current stop now is at 155. Any close below 155 gets us to get out of Amazon. Next up is Spotify. By the way, these charts were all made as of yesterday's close. So some of these stocks are actually continuing significantly higher. Spotify is one of them. Maybe not Spotify, but there's a few that are significantly higher today, which is good. But we're in a bull call spread here. July options, we're along the July 200 calls, short the July 250s. We paid $17 for it back on December 11th. It's going our way, but our stop now is at 210. Any close below 210 gets us out of Spotify. Ecolab finally breaking out of this this consolidation that we've been in basically since we got into the trade. This has taken longer than I hoped that it would, but it's finally breaking out. We're long the July 220 calls we paid $5 for. Our stop now is at 195, just below this recent consolidation level. If the stock comes back and breaks below 195, that's a pretty loud and clear signal that momentum and the momentum has died and the trend may have reversed. So we'll be out of ECL below 195. TGX Companies, the parent behind TJ Maxx. We're in for the $100 roll. We're getting close. We are long the April 100 calls. We paid $1.60 for them back on January 10th. Stock's looking good. It's trading at 98 and change right now. Looks like it wants that $100 roll. No surprise. But right now our stop is at 94. If it reverses that $100 move and comes on back and breaks the support from last week, we will be exiting the trade on any close below 94. Taiwan Semi, here's one of those charts that is actually behind schedule. This is as of yesterday's close. It shows a close at right around 125. Well, right now it's trading at 131, almost 132. So we're breaking even higher than this. This trade is finally working out really, really well for us. We're along the May 115 calls and short the May 135 calls. That's a bull call spread that we paid $6 for back in January. And so far, so good. But we're moving our stop to 112.50. That corresponds with last week's low. 112.50 is our current stop. Snow. This is a trade that we got into during our Portfolio Accelerator event in New York City a couple weeks ago. Back on January 26th, I was giving a presentation for our audience, and me and Steve Straza actually walked through finding a trade, how we decide to put a trade on, how we decide on the strategy, and then we put it on live. You guys they saw my trading account, they saw me put the trade on, and so far so good. It's working out nicely. We're along the May 210 calls and short the May 240 calls that we paid 10.75 for. So far, so good. We don't seem to have the stop on here. I don't know why the stop didn't make it to the chart. But our stop on snow is 200. All right, 200, nice even round number. If we close below 200, we will exit this trade and salvage whatever is left of that premium. We should be okay if it happens anytime soon. But right now, snow's looking well. It's up 3% today. It's trading at 225. So right here, this chart's out of date, right? It says 218. This was yesterday's close. It's trading at 225 right now. So snow is working out well for us. And the last stop update for us this week is Cadence Design Systems, ticker CDNS. We are long a bull call spread. We bought the May 300 calls and shorted the May 330 calls. We paid $10.25 for this spread. We got into it on January 24th. Boy, the stock had a sense of humor. It immediately reversed on as soon as we got in, but is now reclaiming those highs and breaking out again today. It's trading at 308 right now. So closed yesterday at 300. Today it's trading at 308. So lots of great follow through on many of our winning positions. They look even better than these charts I'm sharing with you right now. But 286, which is the lows from early last week, that's the level. If we reverse on this thing and close back below 286, we are out of Cadence Design Systems. All right, so that's it for all the updated stops. Now we'll review some of the trades that we've gotten into since we last spoke last week. I'm not going to get into the details of these trades. The details can be found at allstarcharts.com. Head to the members section, head to the options section. You will find detailed trading plans for every one of these trades. We talk about why we got into the trade. We talk about what strategy we're using. We talk about where we're out if we're wrong. And we talk about where we may take profits if we're right. All of that stuff's laid out on the blog. If you don't have access to that, send us an email at info@allstarcharts.com and we will get you hooked up with that. But I'll just briefly go through, there's 5 new trades we put on since we last spoke. Travelers TRV, we put a bullish bet on Travelers. We think this thing has legs to go higher. Now, S&P and NASDAQ. You guys are sure if you're paying attention to what the team is doing. JC has been pounding the table on a potential rug pull. And with that in mind, we put on some hedges, some defensive hedges, just in case JC's right. And, you know, he's right more often than he's wrong. So let's give him credit. But in case he's right, we want to kind of protect our portfolio a little bit. We have a lot of long exposure. All those updated stops we just ran through, those are all long positions, right? If the market's going to roll over here, we're exposed. Yes, we have a lot of built-in profits in a lot of those trades, but we'll give a lot of those open profits back in the event that the market rolls over. So with that in mind, we put on some hedge trades here in QQQ and SPY options. Again, details on the blog. You can get them there, but we bought puts. Like, I'm not going to get cute here. We bought puts in QQQ and SPY. They're defined risk, right? We have a plan to get out if we're wrong. So far, we're wrong, and you know what? Happy to be wrong, because that means all of our other longs are working really, really well. We may be early, we may be wrong, but either way, we've got a plan to get out and salvage the risk, even though it is a defined risk trades on these puts. But we will get out at a certain price. All right, here's a bullish position. After just going through that whole thing about how we're protecting ourselves against the downside, boom, here's another bullish position. We put a bearish bet or a bullish bet on XLV. That's the healthcare spider. It's a basket of healthcare stocks, and healthcare, man, it just continues ripping higher. That's new all-time highs you see right there. Now we put on a bullish bet. It's a conservative one, right? We're not getting super aggressive with this trade. But we did put a bullish bet on XLV this week. And then here's a bearish trade. Again, trying to do things to help diversify ourselves a little bit, try to have some short exposure on in case the market rolls over. We got short DHI, DR Horton. Again, go to the blog to get all the details on that. And we made it. We made it to the end. I hope I didn't go too fast this time. Once again, I'm Sean McLaughlin, Options Sean on Twitter. You can always reach out to me on Twitter. Happy to engage with you there. If you'd like more information and getting more access to All-Star Charts ideas and All-Star Options trade ideas, shoot us an email, info@allstarcharts.com. We'd love to walk you through and get you into the community. We also have a live chat room for all of our subscribers where we talk about trades and discuss what we're seeing, and love to have you in there. All right, folks, that's all I got for you this week. Tune in again next Thursday. We'll do this again, same time, same channel. Until then, I'll see you. Bye-bye.